guys, it's Sarah. I am back today. I'm so excited with my guest. Her name is Teresa. And tell me if I pronounce this right. Villaruz?
Yes.
Did I say it right? Or maybe you should say. Okay, good. So Teresa is like a financial wizard, you guys. She's got a lot going on, a lot to share, and I can't wait to hear her story along with you. I kind of like to keep it organic, and we just go with the natural flow. So I have questions for her, and we're going to learn about her together. Thank you so much, Teresa, for coming on today.
Well, thank you for inviting me, Sarah. Thank you so much.
Of course. Okay, so I always like to start off with a little bit of background, just so we have an idea of like who you are, before we get into like the details. So, how did you get involved in like um, investments, real estate investments, and becoming, who you are today?
Yeah, actually, we jumped into the real estate investing by chance in 2000, end of 2010 and early 2011 is when we bought our first property.
Nice.
Essentially, we purchased this condo at a very, it was like at the very bottom of that market crash at that time. So we got a really good deal on this condo. That condo was just so much work because, it was a fixer-upper, pretty much, right?
Yeah,
Um,
there was a reason you got a great deal.
it was a really good deal because, after 5 years when we actually sold the property, it was more than double what we purchased it for.
That's
Yes.
awesome.
So
Good.
we got it at a really good deal because it was at the very bottom of that, the crash. And let me tell you, the story that I have for that condo was just, it's endless. It was a fixer-upper. And I don't know what was in the previous owner's mind, but they had stucco inside the inside of walls. So I'm like, why do you put
Oh,
exterior walling on this condo? So needless to say, we gutted the entire thing. Pretty much by the end of with that condo, everything was pretty much new, right? From the floors, from the walls, because we had to take out the walls and get to the studs. New
wow.
kitchen, everything was remodeled in that condo. And our strategy at that time was really buy, live in it while we're renovating it, then sell it, and then move into the new project. Right.
Yes.
So
Okay.
we did that kind of for a little over 10 years.
Wow. That
And
takes
then,
quite the woman there to do that because you're constantly living in a house that's not complete.
yeah, exactly. And at that time, or we were still working our two jobs at that
Oh,
time too. So
okay.
full-time employees doing renovations on our home. Obviously, there's stuff that we could DIY. We did,
Sure. Yeah.
but areas like, electrical and other stuff,
Yeah.
we hired contractors for that. But it was a lot of like energy, effort, a lot of money that was put in it. But in the end,
Yeah.
it was still worth it, right?
Yay. That's
Yeah.
awesome. That's amazing. So you did that for 10 years while working full time.
While
Oh,
working full time. Yeah. And
okay.
then it wasn't until we moved I live in Monterey right now.
Okay.
We moved here 3 years ago. But it wasn't until we moved here that we decided that we're going to do, buy and hold. So
Okay.
we
Okay.
have a short-term rental and also a midterm rental that we're
Hmm.
holding. And then hopefully with the Gator, community that will expand that portfolio.
I love it. Oh, that's so great. So Monterey, California, is that where
Yes,
Monterey is?
that's home.
Okay. Okay. Wonderful. Yeah, no, I love California. It's amazing. So good for you that you get to live there. Um,
Yeah.
and so after the 10 years, did you exit your corporate jobs? Like was your side hustle able to free you from corporate world?
Not yet. So,
Okay.
I think it was really a calling from God that we moved to Monterey. We grew up in San Jose, California, so the Bay Area, San Francisco Bay Area.
Yeah.
During the pandemic, we had the opportunity to, work from home or work remotely 100%. We were
Good.
given permission to do so by our employers.
Yeah.
So my husband and I decided to move to Monterey. We just felt that it was calling us and it was still close to home, to family,
Yeah.
so that
Yeah.
every other weekend we could visit them, the Bay Area,
Okay.
because it's just an hour. drive. So I decided to move here. I didn't know that it was actually God that was pushing us to move here. I'm not sure if you're a woman of faith, but I am. So
Yes, definitely. In fact, that's something that attracted me to your posts and made me reach out to you is that you're all about faith and you are not ashamed of it. Like you
no,
always are mentioning it in your posts, and I think that's beautiful. And yeah, it definitely drew me to you.
yeah, thank you. Well, we don't have everything that we have is because of God. So just
Yes.
really appreciative of the blessings that He's given us, right?
Yes.
But to continue that story, we moved to Monterey not knowing that it was actually the path that God wanted us to do because 6 months after we moved here, that's when I was diagnosed with invasive breast cancer.
Oh my gosh. I just got
Yeah.
chills. Six months later. Wow.
6 months later, and that's when I used to have pretty, I would say, when I was in the Bay Area, I had a very popular health insurance there. But
Hmm.
during my time there, I felt like I was just another number that's going in and out the the revolving doors.
Yeah.
But when we moved here in Monterey, where most medical facilities are very like small, and you really feel like they really care for you. They know you
Good.
by name, your first name, and every time you come by, it's just a lovely greeting. And so
Wow.
I really felt at home when I went to my doctor, and she mentioned that she found a lump. And when she said that there's a lump, but it might not be anything because I had a history of benign cyst in my
Okay. Okay.
in the past.
Yeah.
But for some reason, I just had a feeling that I need to get more answers for this
Hmm.
particular lump, right? And she was like, "Oh, yeah, that's fine. We can get you a mammogram." And mammogram was like inconclusive. Got me an ultrasound. That also was inconclusive.
Oh, you poor thing.
So, and then in December, we decided to go, okay, let's get like a biopsy. Got a
Hmm.
biopsy. And then on December 17, 2021, that's when my doctor called me and unfortunately gave me the sad news that I had cancer.
Wow. Wow. Right before the holidays
Right
and you
before
had been waiting all
Christmas,
that
right?
time for an answer. Um, and do you mind if I ask like how advanced was it?
Yeah, it was tearing between stage 2 to stage 3.
Okay.
It was pretty much growing at a fast rate, so we needed to get at it immediately. Otherwise,
Yeah.
it's going to
Wow.
spread everywhere else. So we scheduled my surgery. So December was when we found out about it, and then we scheduled my surgery in February. So it
Mm,
was like, let's get you going, right?
yeah.
Immediately. And then during that time, they prescribed some chemo pills, and which really drained all my energy and
I can't even
me was
imagine.
sick.
Yeah.
Yeah. But the thing why I mentioned that I felt like it was a calling from God that got us to move to Monterey
Mhm.
was because there is a really good breast cancer facility here in Monterey that was
Yeah.
able to like really take really good care of me. So
Good.
I'm that entire journey was just really to get me the best care that I needed in order to beat this.
Yeah. And you
This
didn't have to drive a long ways and fight with traffic to get there. It was right in your hometown there. That's
exactly.
great. It's
Yeah.
amazing.
Yeah.
Oh,
Yeah.
someone
So,
was looking out for you for sure.
yeah,
Yeah.
absolutely.
Oh
Absolutely.
my
So,
gosh.
yeah.
So what happened? I mean, I don't know how personal you want to get on this part, but what happened after that? And because that was just 3 years ago.
Yeah.
So to bring you up to where you are today, how did that transition happen?
Yeah. So, while I was going through my treatments, really this time, because I still had a W-2 at that time.
Okay. Wow.
Having all that time to while I was off work, really think about like, what am I doing with my life, right?
Yeah. Yeah.
Am I happy with where I am in career wise?
Hmm.
Am I spending enough time with my family as I hoped, like how I pictured myself back when I was
Yeah.
younger? And the answer was no.
Yeah.
I was climbing up this corporate ladder, but it felt like it was draining my soul, right?
Mhm. Mhm.
And then, yeah, I would be at home because I was a global marketing leader. I had a team
Okay.
across the globe,
Yeah.
which was great in terms of like, having a team and all that stuff. Given that I had a team across the globe, I didn't have a 9 to 5 job. I
Mhm.
had a nine around the clock job because I had to dedicate some
All the
time
time
to
zones.
people. Yeah, all time
Yeah.
zones. And which means that even when I'm at home with my child, my brain, my mind is at work.
Yep.
So yeah, I'm maybe spending the hours with my child, but I'm not fully present, right?
Yeah, and then also working from home, it becomes kind of oftentimes employers think people that work from home actually work less, but I think it's the opposite. Because when you work from home, you're dedicating more time, and especially like you
Mhm.
say, if it's around the clock kind of in time
Yeah,
zone.
no, absolutely.
Mhm.
Yeah. And so because I was working around the clock, I was overworked, tired, and really it was draining my
Yeah.
soul. And I was like, I need to get out of this. I need something else. And that's kind of like where the infinite banking thing came up, right?
Yeah.
What I didn't mention earlier was that my policy, I was able to accelerate because of my cancer diagnosis.
Mm.
So I accelerated that. So the death benefit that my family would have inherited when I pass away, I was
Mhm.
actually able to use that while I was alive. So it
Oh,
helped with some of my treatment, the cost of my
expenses.
treatment. Yeah.
Now, when you say that policy, are you talking about the health insurance policy that you had through your employer, or your life insurance policy you had through your employer? Is that what you meant?
No, it's a life. So I had a life insurance policy with my employer, but that's traditional life insurance. It's
Yeah.
only good if you pass away and it benefits your family, not you.
Okay.
So I had a separate life insurance policy that I purchased when my daughter was born
Oh, you
because,
already had it in place before the
yeah,
cancer.
I
Okay,
already
good,
had it in place
good.
before my cancer.
Yeah.
But little did I know that it had living benefits. So living
Nice.
benefits essentially is a rider that comes with certain life insurance policies.
Mhm.
Some it's an additional cost, but the way that my policy was created, it wasn't added without any cost. But essentially,
Wow.
that rider is if you get diagnosed with a critical illness like cancer, stroke, heart attack, or if you have the doctor said you have terminal illness, which is like
Mhm.
you only have 24 months to live,
Wow.
or if
Yeah.
you were diagnosed with a chronic illness, which is if you can't perform 2 out of the 6 things that a normal
Daily
like you would
functions.
need to be able to do to live a normal life, then you can accelerate the death benefit. So I
Gotcha.
didn't know that until I was diagnosed and my life insurance agent called me and told me, hey, you could do this if you're stressing over, your income or the cost of your
Yeah.
treatments. And I was like, whoa, I didn't know that. So I did that.
My
And
goodness.
that's kind of like where when I was thinking, what should I be doing with my life?
Yeah.
It was kind of like the wake up call. This might be your calling because people need to know about the living benefits as part
Oh,
of
wow.
life, you know.
Wow, that's very powerful. I love your story and how it ties in. And like you said, you like this wake up call, this saved my life, what you said, and other people, need to know about this because yeah, everybody always thinks about death benefits or, disability or short-term disability, long-term disability, whatever, but they don't
Right.
really talk much about the living benefits associated with life insurance. So, question, was it a whole life policy that you had purchased originally?
So that what I originally purchased is another type of permanent life insurance. So there's whole life insurance, which is permanent, and then there's IUL or that's
Oh,
short for Index
index.
Universal Life. Yeah,
Yeah.
so there's difference between the two, and it really depends on your goals and your budget, or not budget, but your
Yeah.
goals and your risk tolerance and other factors where you would steer towards one versus the other.
Yeah.
We purchased an IUL because we had a little more of a risk tolerance. We're investors,
Because
obviously.
it follows the market, right?
Yes. So it does
Okay.
follow the market, but it's protected from market volatility because you have a guaranteed floor.
Yeah. Or the bottom, the floor.
The floor, yeah. So when the market crashes, your money, your principal is safe from
Yes.
that. So that's what I had, and that's what I accelerated. Actually, I had two policies at that time. Actually, three. One is with my employer, right? And then I had a term life insurance that I purchased when I started my right out of college. I just thought like if something happens to me, my mom would not have to worry
Oh, that's
about
so
me.
sweet of you.
So I
Yeah.
had that term, and
Oh,
then I purchased the IOL when my daughter was born.
got it. Okay. And then, so you had that policy, you learned that it had living benefits. When did it turn into an IBC policy for you? Like,
Yeah,
how did that come
so
about?
yeah, the IBC policy, actually, because I accelerated my IUL, I wasn't able to use that. I pretty much, when I accelerated it, it nullifies the policy, right?
Okay, gotcha.
However, my husband, we bought our policies at the exact same time. So while I was learning about the insurance business and the different benefits of life insurance, that's when I learned about, I learned about R. Nelson Nash's book, right?
Yeah.
They mentioned this I think they mentioned it on one of the videos on the Gator method.
Oh, okay. That's
Yeah.
nice that people are
So
learning about that. Yeah.
yeah. So I came across that book and really digested it, learned more about insurance, cash value life insurance policies. And that's
Yeah.
when I learned about infinite banking concept. Right. And we're like, okay, well, my husband still has an IUL with X amount of cash value in it.
Yeah.
And so we decided to deploy that money on some of our rental properties to furnish them.
Nice.
So we decided that the first property that we have as a short-term rental, which is in Coachella, um, his policy to fund some of the furnishing and all that stuff there. And then the income that we're getting there, we're essentially just paying back the loan.
So cool. So cool. Okay, so you didn't have to necessarily restructure the existing policy. You just learned how you could use it.
Right, exactly. But also we figured out that we weren't funding our policy properly when we purchased it.
Yeah.
So once I learned how to structure policies or even properly funding them, we started funding my husband's policy the right way.
Yeah, exactly.
Yeah.
That's great. Do you mind if I ask, with I have an IBC policy as well, and just for the audience, if you don't know what it is, it's called infinite banking, for IBC, infinite banking concept. But my policy is, I think is pretty awesome because it's a 10/90 split, or maybe 90/10 split. I always forget which way to say that.
Yeah.
And I know before I found that one, I was sold a 60/40. And I got rid of that one when I learned about the 10/90. So just
Yeah.
curious, what kind of split do you set up usually for people?
So usually the way I set up for people, depending again on the type of policy, right? So if it's a whole life policy, which I assume is what you got, right? It is that 90/10 split.
Oh, good. Good, good.
Yeah, for an IUL, on the other hand, it really depends on making sure that you don't hit a MEC. So for people who don't know what a MEC is, it's essentially making sure that you fund your policy just to the point so that you're not overfunding it, then it triggers a taxable event, right? Because
Right.
if you're overfunding it, now the IRS or the government will see that you're using it not as a life insurance policy, but rather as an investment tool. So now they're going to
Right.
start taxing you on the gains. So with IULs, there's certain way to figure that out, and most of the time it's around 85 to 90,
Okay.
15-10 split. So it's still in
Okay.
the high end, yeah.
Yeah, that's still pretty good, especially compared to most companies that are doing 60/40 or 40/60, whichever way you say it.
Yeah.
And then just for the audience, to understand, if the split is higher for cash value, so like her and I, we both have a 10/90 or 90/10, and so 10% is going towards the premium, 90% is going towards our own cash value. And that means that whichever agent set that up, is actually getting a smaller commission. And so if an agent tries to set you up with like a 60/40, in my personal opinion, go find somebody like Teresa who can actually do a 1090 for you, because that way you can maximize your cash value growth. And it's selfless of Teresa because she's actually getting less commission for this.
Yeah, absolutely. Like you said, life insurance agents do get paid based on how much life insurance they sell. So as an infinite banking strategist, what we do is we try to buy you the least amount of death benefit based on your budget or based on what you could qualify for, the least amount of death benefit, so that most of what you're paying the insurance company is actually going into your cash value, which again, some people might be like, what's the cash value? Think of it as a high yield savings account that's attached to your life insurance policy.
Yes, it's pretty awesome. Yeah,
Yeah.
exactly. I love that. Well, and so you didn't have to take out another separate policy for yourself or anything because you had your husband's, and that's the vehicle you guys are using, I'm assuming.
Yeah, so that's what we're using for before we started Gator. But we also have my daughter's policy, which we started really thinking, obviously, yes, to
Right.
cover her, but we were thinking that it's a better educational plan for her rather than the 529
Yes.
plan. And the reason why we went with a life insurance, a cash value life insurance policy is because, kids nowadays, most of them are not even thinking about going to college at all. They
Right.
want to go straight to entrepreneurship, or even be like content creators.
Yeah, right. This gives you a lot
Yeah,
more options than a
right.
529 plan.
Exactly, because with 529, if some of your audience who might not know what 529 plan is, it's really an educational plan, and
Yeah.
it's only tax advantage if you use it for educational purposes, right?
Right.
But like I said, some kids nowadays don't even want to go to college anymore and want to just start their own business. At least if it was in an IBC plan, right? They can use it for anything. They can use
Exactly.
it for going to college, or they can start their own business, or being like a real estate investor.
Yes. And so like um government plans always come with all these rules and restrictions, but IBC policies are amazing because, like she was just saying, you can use it for anything. You can buy, they could buy their first car that way.
Mm-hmm.
The flexibility is endless, and then it's also a tax savings because you're putting money into the policy after tax money, and so therefore when you're taking a loan against it, you're not getting taxed on that loan money either.
Yeah, exactly. With an IBC policy, not only does it grow tax free, you can access it tax free. And the
Yeah.
beauty is that, when it's time, when God calls you home, it transfers to your heirs tax free.
Yes, that's exactly it. And you don't have to wait until, like IRS rules for like a Roth until whatever age, 59 and a half or whatever, to be able
Exactly.
to touch it. You can
Right.
circulate that money over and over and over and allow it to grow. Oh, and this is another really, really cool feature for people that might not know. When you take out a loan against an IBC policy, the principal continues to grow and compound. And when you pay that loan back, even if it's 10, 20 years later, it will have grown at the same amount that it would have even if you hadn't taken it out.
Yeah. Yeah, absolutely. So think of it like, okay, so if you're a real estate investor, right? Like, this is kind of like what I tell.
Yeah. Apply it to that.
So let's say you have $100,000, and I'm just doing this because for math's sake, I'm not that really great at
Yeah,
math.
I'm the same way. Yeah, easy numbers. Yeah.
Let's say you have $100,000 in your Bank of America savings account. And let's just say they're being generous and giving you 1% on that 100,000.
Right. Isn't that crazy? I know. That's generous. Yeah.
Right. And then, as Gators, let's say someone comes to us and say, "Hey, I got a deal for you, I just need $50,000 E&D. And we're closing in 30 days, right? And at the end of that 30 days, you're going to get 20%, right? Really good deal." And
Yeah.
you're like, "Okay, I want to jump on this," after obviously due diligence and making sure that the deal is right.
Yeah.
You say, "Yeah, that sounds like a real good deal." So you deplete your $100,000 by $50,000 to give to Mr. deal maker right here.
Yeah.
So
Yeah.
yes, you have your $100,000 is making money for you. Your first half, $50,000, making 1% in Bank of America, and then your other $50,000 making 20% with Mr. Dealmaker right here, right?
Right.
Now, let's say rather than your $100,000 being in Bank of America or whatever bank you use, it's in the savings, the high yield savings account that you have in your policy,
Right.
right? So $100,000 earning, somewhere between 3.5 to 6%, or even more than that if it's in an IUL.
Right.
So it's earning a high interest. And then let's say Mr. Dealmaker comes to you and say, I have this deal, need EMD, $50,000. At the end of that, you get 20% in 30 days. Cool. So you'll collateralize your savings account and get $50,000 of the life insurance company's money.
Yeah.
So that's again using OPM, right? Other people's money. You're using the life insurance company's money.
Yeah.
All the while, your entire $100,000 is earning you the interest as if, it is untouched. It's just used as a collateral, right?
Yeah.
So you get that $50,000 from the life insurance company. You deploy that to make you 20%. Now you just duplicated your money. You have $150,000 total working for you. Your entire $100,000 in your IBC policy, still earning interest as if you've never used the money,
Right.
and $50,000 of life insurance company money that's earning you 20% in 30 days.
Correct. It's amazing. And on top of that, if somebody is super astute and they caught that we mentioned that you took a loan out for that, even though the loan, like on my policy, it's like 5.66% when I take a loan out on my money. It's a line of credit interest rate. It's not like amortized, and so the amount of interest, I don't have a calculator in front of me, but like $50,000 times 5.66%. But it's per day. It's much smaller than like credit card interest rates or like amortized loans. So
Right.
the amount that you would be paying back in interest for that 30 days would be seriously like an insignificant amount.
Yeah, no, absolutely. But then also like that's still like financial arbitrage, right? You're still earning a lot more on your policy compared to what you're paying the insurance company for that loan.
Yes,
right? So,
exactly. And then there's another way to look at it as well is, like you said, the whole amount is still compounding and growing at such and such rate. And then if you, let's just say it's growing at 6%. And then if your loan is almost 6%, it's free money. It's a wash.
exactly.
So,
Exactly. And that's the beauty when you're actually deploying that money to make you more money as a gator or as a real estate investor and stuff like that, because then that's kind of like what the banks do, right? When they take our deposit, they turn around and deploy your money to make them the bank's money.
Correct. They're getting rich.
A small percentage of what they're making with our money. We're just kind of like duplicating what the banks do so that we are benefiting more from our money than the banks are.
Heck yeah. Yeah, exactly. I love that. I honestly, IBC policies get me very excited. I got licensed when I bought my first IBC policy because I loved the concept so much. I also wanted to be able to share it. And and I'm not as gung ho about it as you are, obviously, from watching your videos. I'm probably just as passionate. I just haven't like pursued it as like, but this is so cool. It's like fun to talk about with you,
Yeah,
And then
no.
another thing that you had said as we're talking about all the benefits, another thing you'd said was it's a collateral. So I just wanted to explain that for people. What she means by that is you're taking this $50,000 loan and it's an interest-only loan. You don't have to pay the $50,000 back ever if you don't want to. The reason why is if you were to die, then your death benefit is just lowered by the amount that you had out on the loan. So that's the collateralization that she's talking about. And then, if you pay it back, then that's great. But you don't have like a typical like loan payment that you now have to keep up with like you would with any other $50,000 that you would borrow from anywhere else.
Exactly, exactly. Again, that's the IBC concept, right? Infinite banking concept, and it's becoming your own bank. So, as your own bank, you define the terms, the repayment terms. So, you could either pay, as you would a normal loan, you would, or you could say, I'm going to pay in 5 years, or I'll pay when this deal closes,
Yeah.
or I'm not going to pay in this lifetime. I'll pay
Yeah.
when I die.
Yeah. I mean, where else can you do that? So it's truly like an amazing tool to have in your tool chest. And like you're saying, if you apply it towards real estate, wow, you're really, really using your money to make money. And it's just so smart.
Yes, absolutely. Absolutely.
And then on top of it, your original point, the living benefits that come along with them as well. So there's
Yes.
just so many benefits to this. Can you speak for a moment on laser banking? I know in our messages you had mentioned that you also do laser banking. I don't know if it's just a different title than like velocity banking, or can you tell us what it is?
Yeah, so laser banking is similar. It's the same concept as infinite banking, rather
Okay.
than, however, with infinite banking, it's using whole life insurance policies, right? With laser banking, it's more of the IUL side.
Oh,
So
okay.
that's universal life. And the reason for why we're kind of those policies work, right? With whole life insurance, it's with a mutual company, right? So what happens is you get like an interest, but then your money also grows depending on how the mutual company performs that
Yeah.
year, right? Because as a policyholder, you're essentially a stockholder of that company. So the
Right.
company performs well, you get dividends, right? Or X amount of dividends. With laser banking, on the other hand, with index universal life policies, it's not with a mutual company, or it could be, but it's not necessarily attached to how that insurance company performs. It's attached to the stock market.
Okay.
Right?
Got it.
So with IULs, you could get market like returns, but because of the guaranteed floors, your money's protected from the market volatility. It's the same concept, it's just different tools that's being used.
I love it. Love it. So yeah, no, that's a great explanation of the two. I wasn't even aware, of if somebody had asked me, all I would have known is it's tied to the stock market. So thank you for explaining the difference there. So are you also a TC and in sub two?
No, I'm just really with Gator for now. I know there's like this, and Pace kind of talks about it like the shiny object syndrome, and I'm trying to not fall in that.
Yeah, that's smart.
Yeah, so the reason why I got into Gator was really because my daughter's policy. It was sitting there earning 7%. And we're like, it could grow faster if we deploy it doing something, right? Because my husband's
Yeah.
policies, we're actually going to use it to start up our boba cafe here in Monterey.
Oh, I love boba. That's awesome.
The funny thing is, in this entire county, there's only 5 boba cafes. We had to drive almost 20 minutes just to get to the closest boba cafe to it.
Oh, that's crazy.
Yeah, so we're like, okay, well, there's a there's a
There's a
need
need.
here, there's a gap. Let's jump into it. So that's what we're using his policy for.
That's so cool.
Then my daughter's policy sitting there doing nothing. I was like, let's do something with this. And then
Yeah.
all of a sudden, I don't know, maybe, Pace is listening to us. But after that conversation, I just started getting bombarded with this Gator ads.
Yeah. Yeah. Oh, that's so cool. I wanted to back up one quick thing. Another added value for people, that we keep throwing out all these awesome perks, but another perk that she's talking about is her child's policy. So with the MEC, you can only put in so much money per year into this investment vehicle. So she's got her husband's and they probably max it out. So if you have kids, let's say you have 5 kids and you have lots of extra capital every year that you want to invest and you want it to grow way faster than like a 401k and actually have access to it, you can get a policy out on each child. And it's sad to think of it as a life insurance policy, but think of it as an investment policy like she's talking about. It's for their future, but you can also help it grow with investments along the way.
Exactly, exactly. And then don't think about it as like, okay, I'm putting a life insurance on my child just in case she passes away. It's also insurance just in case she gets an illness like I did, right?
Yeah, right.
Yeah,
Correct.
exactly. The thing with my family too is that cancer is actually prevalent in my family. My mother's father passed away from cancer. My mother's sister passed away because of cancer.
Wow.
And then my mom's daughter, which is me, got
Yeah.
cancer, and thank
And
God.
young.
And thank God I survived. And so that was like another selling point why we decided to like buy 2 policies for my daughter.
Oh, yeah. Well, good. Okay, good. And you just educated me. I didn't realize that. Well, I should have known that. I could have gotten more than one policy for myself too. Okay. Yeah, that's awesome. So yeah, there's a lot of perks with life insurance, and it's just sad that people hear a lot of people hear the word whole life insurance and they immediately shut down because I guess it had a bad rap back in the day, or people selling it charged too much or something. But not with IBC policies, not if they're structured correctly.
Right, absolutely. Because, like back in the day, they just want to sell you as much insurance you could afford, right? So
right.
that most of what you're paying for the policy is going into the cost of insurance, and
Yeah, the
you're not
premium.
seeing anything for you while you're alive.
Yeah. No, and so back to your point, it's another living benefit, really. That's so cool. So I'm curious about what I saw online when I was researching. First of all, I want to put in a plug. Teresa has an ebook, everybody. And Teresa, do you want to go ahead and tell them where they can go get your ebook?
Yeah, so you can go to teresavillaruz.com. That's my website. And just scroll further down and you'll see some of the ebooks that I did write. One is about infinite banking concept and how you could use that to become your own bank. But there's also information there, or ebooks that I wrote about educational plans, using it as an educational plan for your kids.
Nice.
And another one called executive bonus plan, because as a business owner, you could actually leverage life insurance and it be a tax write-off
on each other, right? Is that what you meant?
Yeah.
The executives?
Yeah, so you could get insurance, life insurance on like for every partner of the business, because it's called key executive or key person. Key person insurance. And that's because, like, say a partner passes away, it might really affect the business. So having that insurance there. But then also as a business owner, and I'm not sure if this is kind of like widely known in the insurance business. For example, Coach Harbaugh used to be, when he's got his contract with Michigan, they actually gave him a life insurance policy as a bonus, right? And it's a cash value life insurance policy. So not only is the college getting the tax write-off because it's an executive bonus plan, so it's counted as a payroll expense to them.
Yeah.
But Harbaugh now has, like, his cash value that he could deploy, however he wants to invest, and he's covered with, based on how much they're paying in premium. I think his policy might have been at least $16 million death benefit. But, like, his family will be covered in case something happens to him. He has the cash value of that, and he's not paying for the policy. The college is. So the college is paying for that. That's his bonus, but it's a tax write-off for the business.
That's so cool. What a great. Okay, I'm tempted to go read that book now. That's awesome. How many books do you have then in total so far?
Well, I have 3 ebooks. Those are all digital, but I have one that's also available. It's a hard copy. It's right now in Amazon. So it's a published book called Your Money, Your Rules. And yeah, so it's on Amazon and Barnes and Nobles, whichever one you to jump on. But it's all about infinite banking. So while my ebook kind of covers high level how it works and all that stuff, the book kind of dives into it a little bit deeper, and also shows some actual illustrations of policies that I've created for some of my clients, so you could see how it actually grows.
Oh, that's going to be so helpful, because if anybody's familiar with Nelson Nash's book, it's really cool, but it's outdated. The policy examples are, in previous decades with interest rates that aren't like what they are today. So that's wonderful that you have that in there. Are you wanting to mention your podcast potentially?
Oh, yeah. Well, I'm working on my podcast. I have several guests lined up already, and hopefully Sarah will be on as well. Um, but it's titled the same as my book. It's Your Money, Your Rules, and it's all about like how do you earn, save, and invest your money, and just to make
Yeah.
sure that you're not only are you set, but you're creating generational wealth as well.
So cool. You are a girl on fire. Like, that's so impressive. Just 3 years ago you had cancer, and now in just 3 years you have survived, and you have written these books, you published a book, you have your website, you're on webinar. That's another thing, you guys. She has a webinar that you can go watch on her website, I believe. Is that where you get into access to that?
Yeah, so you can access. I have well, it wasn't me that actually hosted the webinar, but I was introducing my business mentor, so
Okay.
Doug Andrew, and it's mostly on the retirement planning and
Oh, okay.
using life insurance to build your retirement plan.
I
So it's
love it. And
retirement.
yes, and that's just another topic that's so impactful right now. With all the people retiring, baby boomers and
Mhm.
things like that, and the next generation can start planning with
Right.
a much more flexible plan than again the government offers. Um,
Right.
so so questions that I had when I was looking at all of the awesome products and things that you have to offer. I think it was on your Facebook page, you had mentioned join my team and travel the world with me.
Yeah.
What kind of business are you like when you say your team, are you talking about like become a life insurance salesman with your company? Is that right?
Yes. So I know that we're doing life insurance sales, right? But I don't see myself as a salesperson. I
Okay.
don't know why, but that's also the reason why when I decided on a career, I went the marketing route versus
Uh-huh.
the sales route.
That's so
I don't see
smart.
myself
Yeah.
as a salesperson, but what I see myself doing in this business is really educating people.
Mhm.
So I'm looking for educators who would help me really spread awareness on the benefits of living benefits, right? It happened
Nice.
to me. People need it, especially since I saw a stat, not yesterday, but like a while back, that 50% of Americans will get diagnosed of cancer.
50%.
50%. That's half of
Wow.
our
Wow.
population. It's not if, it's when.
Yeah. Crazy. Wow.
Yeah. And
And that
70, the
includes
other
kids.
thing too is 70% of Americans will suffer either a stroke, heart attack, or cancer, or multiple.
Mm.
The
Wow.
living benefits is really something that I'm passionate about because I honestly could say now that my life insurance, with the help of God,
Mhm.
um, saved my life.
Yeah. Yeah. It throws people into financial ruin and bankruptcy if they
Exactly.
don't have these products. So, and also maybe you wouldn't have been able to recover as well if you were constantly stressed about the financial situation that you were in. So they just
Exactly.
had so many benefits, like you say, peace of
Right.
mind.
Yes. The one thing that another I love stats. I love stats.
Yeah. Yeah.
But there's another stat that says that 80% of 61% of people who got cancer or stroke or heart attack filed for bankruptcy.
Yeah.
So the number one cause of bankruptcy is actually unpaid medical bills.
Yeah. Yeah. And that just reminded me too. Where do people go? Like, if they don't have a policy, like you were talking about, what do? They look to where they have a source of cash for 401k, and then
Mhm.
they cash it out. For a hardship withdrawal, but they're still going to be taxed on it, I believe. I mean, yeah, there's certain exceptions. Maybe the penalty's waived, but I think they still get taxed on it. And then
Mhm.
there goes their life savings.
Exactly. Exactly. And
So
yeah, I mean, like you're worried about your retirement, but then you're also worried about how to pay for
living.
your medical bills. And
Mhm.
that might not even be enough.
Yeah.
Yeah. I mean, another stat. Like I told you.
I love stats too. Keep them coming. We're
So
nerding out on this.
one thing that we found was that if you file for bankruptcy, you have an 80% mortality rate died from the disease versus people who could actually afford their treatments.
So the
That's
stress does come into play.
yeah, the stress and all that stuff.
Wow.
Really, that's kind of like, to answer your question, I'm trying to build my team of educators to spread the awareness process.
Yeah. Okay, so let's talk numbers because I'm always open to new opportunities. So this is for others, but also for myself. When you talk about joining your team, is this like your own company under your own name, or are you talking about just like joining the company that you are working with? How does that work? And would you be splitting commissions, or how does this work?
Yeah, so we're not splitting commissions, right? It's with my IMO. The IMO that I'm with is Freedom Equity Group. So I opened up my own agency, which is TSV Capital, but I
Okay.
partner with Freedom Equity Group as kind of like the IMO. For people who don't know what IMO is, it's independent marketing organization for the life insurance company industry. So I'm with Freedom Equity Group. When I'm building my team, it's really encouraging you to start your own agency. So it could be, Sarah's own agency that's partnered with Freedom Equity Group. Now, we're not going to split the commission. You get all your commission. And really, with Freedom Equity Group, you just have to to increase your commission percentage, you just have to move up the rank.
Okay with that. I personally have educated myself on network marketing, and I think it's an amazing business opportunity. And, people just need to educate themselves for sure.
Exactly. It had kind of like a bad rap because, most of the people that complain about it is because they didn't put enough effort and energy into their business, because it really is your business, right?
Yeah.
Like
Yeah.
it's the thing with this one though, with Freedom Equity Group or any IMO, hopefully in the insurance business, is that you're not splitting commission with your upline. You're not. You're getting 100% of your commission based on the rate that you are at that level, right? Your upline will only get, they're not getting money from you. They're getting money from the insurance companies, right?
Yeah.
So you're not splitting commission with your upline. Again, your commission is your commission.
I love it. That's great. It's funny. Full transparency. I have always wanted to be in network marketing. I have tried multiple companies and never went anywhere with them. But I've always known it's because I just hadn't found the right company, the one that I was like super passionate about their products before. I'm like, I need to be passionate about the products. And, obviously, like when people watch this interview, they're going to see like you and me both nerding out on this. Like we love it. It's like, it's nothing but win, win, win for other people. And so this is so cool. I never even realized that an IBC policy had been kind of like something that I could offer in a network marketing kind of way. That's awesome.
Yeah. So if you want more information on that, we could like talk offline or.
Oh, sure. Oh, sure. Yeah, we will be talking for sure. Yeah, no, this is wonderful because that was one of my questions. I was going to ask you what TSV Capital LLC was. And you also had mentioned mentors, Joel and Arlene and Doug. Are they all with Freedom Equity Group then?
No, so Joel and Arlene are my mentors with Freedom Equity Group. Doug Andrew is, if you're in the insurance space and you're selling IUL as well, he is the godfather of IUL. So if anything, he is a really good mentor to have because he'll teach you how to really structure those policies and making sure that it stays tax free and all the tax benefits. And so I've learned so much from him, his sons, and his team.
That's so cool. Okay, wonderful. So I actually just was looking at my notes. I went through all my questions, which is so cool. You have so much to offer. This interview has been so fun. So I guess the only other thing I can think of would be, okay, well, we already talked about real estate and how it can apply to that. So you kind of have two different like gigs going on there, being able to use your money in multiple ways. Is there anything else that I didn't bring up or ask that you just want to share with what you're doing and how people can get involved?
Yeah, I mean, so I think one thing that I didn't mention earlier, the reason why we purchased 2 policies for my daughter, obviously, it's not that it could be because like if you already max funded one policy, you get another policy.
Yeah.
But the reason for that was because, again, like my family has a history of cancer. So if you accelerate the death benefit on a policy, it nullifies it.
Oh, that's right. So now you have a backup policy.
Yes. So we
Oh,
have a backup policy just in case she needs to accelerate one.
that's so
That way
smart.
she's still covered.
So smart. Oh, wow. Yeah, you're an excellent strategist. That makes a lot of sense. Wow. And you know what? There's also probably stats out there. You were listing off the stats for, how many people Americans get sick with this and that. There's probably also stats out there on, it's so sad to even think about, but like St. Jude's and how many, what percentage of children are, sick, all of these chronic diseases, not just cancer, but all of them that,
Right.
living
Yeah,
benefits will be helpful with.
exactly.
Yeah.
Exactly. And one other thing is that, the living benefits could also be, just think of it as your long-term care insurance as well. So it could replace that because in case you get, you need long-term care. And if your diagnosis is that you can't perform 2 out of the 6, normal things, you could accelerate that and use that for your nursing home or whatnot that you need for that.
Yeah, yeah. And then I just had another thought. Oftentimes, like grandparents will buy an education plan or whatever for a child that's about to be born. But what if that child is born with severe developmental disabilities?
Right.
And an example would be, again, buying a life insurance policy for a child that's, coming into the world would have all of these other ways to help the family as, the parents as the caretaker for the rest of the child's life. So yeah, gosh, there's so many reasons. And then like you briefly mentioned earlier too, retirement, you can use this money over and over and over to make you money throughout your lifetime. And then it's also continuing to compound and grow so that when it comes time to retire, you can live off of it.
Yeah, and it's tax-free. So it's tax-free retirement, unlike your 401k where you still have to pay for your taxes when
Yeah.
you withdraw it. This one is just everything goes into your pocket.
Yes, yes. Oh, just nothing but wins. I love it so much. I'm so thrilled that we had this conversation.
Yeah, I'm so happy we've had this call.
Me too. Yeah. I look forward to talking with you more off of this. And yeah, can you think of anything else that you wanted to mention before we sign off?
Well, we've talked about my website. We've talked about my books. Talked about a training. Let's see. Talked about growing my team. I think really that's it. Other than I'm a gator too, so hopefully we'll work on we'll gator wrestle on some of the deals that comes out our
Yeah.
way. So yeah.
Yeah. Well, and that thought just came to me too as you were talking about Gator. Is basically she's a private money lender, you guys. So if anybody out there watching this video has some sort of deal, she may be open to doing a transaction with you that could help you with whatever. It doesn't have to be real estate. I'm putting words in her mouth, but if the deal makes sense, she's got capital to be able to deploy. So yeah, come to Teresa.
Yes.
All right. Well, sounds good. Yeah, I can't wait to post this. I think it was super informal, or sorry, wrong word, super educational and informative. That's the word I was looking for. And yeah, I really appreciate your time. Thank you so much, Teresa.
Thank you so much, Sarah. You have a wonderful day.
You too. Bye.
Bye.